Joining me now is Jordan Trimble of Skyharbour Resources. I'm assuming you're the president, CEO, and director?
I am, yes.
You might as well be a director if you're going to be the other two.
Yeah, I am, and technically one of the founders. It was, call it co-founded by myself, our group here in Vancouver, and a geological group out in Saskatoon. So yeah, we've been a uranium company, an Athabasca Basin focused uranium company now for almost 10 years. It's coming up on a decade. So we were there through the thick and thin, starting at really the first few project acquisitions in 2013 and 2014, and at the time, obviously the market was in a real challenging place, and it was very difficult to raise capital. But we were opportunistic and had a very much a contrarian view of the uranium market, and at the time of the metals and mining markets in general. But we saw an opportunity in the Athabasca Basin. We were able to start acquiring projects at attractive valuations. I mean, really at the time they were almost fire sale asset prices and deals that we were getting done. Spent the first several years building that initial project portfolio up. And then in 2016, we consummated a deal with Denison Mines. That was at the time quite a transformational deal for Skyharbour, and we acquired what has become our flagship project, Moore Lake. We now own 100% of it, an advanced stage exploration asset on the eastern side of the Athabasca Basin. And the president and CEO of Denison, Dave Cates, joined our board. We've built a very close working relationship with Dave and the team there, and Denison remains one of our largest shareholders, our largest strategic corporate shareholder. And we really then spent most of 2016 through, call it last year, 2020, actively advancing and drilling Moore Lake. There's a high-grade zone, several zones of mineralization, what's called the VRIC corridor. So it's a 5-kilometer long conductive corridor. Historical drill results as high as 21% U3O8 over 1.5 meters. That was within a 6-meter zone of 6% U3O8. We actually drilled that hole in 2017 in one of our first drill programs when we acquired the project, but some very high-grade mineralization in several zones of high-grade pods of uranium at this VRIC corridor, and it's relatively shallow too, about 250 to 300 meters. Kind of straddles the unconformity, so a good chunk of it's hosted in the sandstone above the unconformity or above the basement rocks. And then more recently, in the last several years, we've been doing a lot of work and a lot of drilling to test deeper targets in the underlying basement rocks, which I can talk a little bit more about later on. But bottom line is, it served us well as a flagship project. There's still a lot of value we think we can unlock there through additional drilling. But last year we announced a major transaction that we'd been working on for some time with Rio Tinto, and the project that we're acquiring from them, we have an option to earn up to 100% of a project called the Russell Lake project, which is actually all the ground. It's very, very strategic in that it's all the ground, all the land between the McArthur River Mine project, largest, highest grade uranium deposit in the world to the north, owned and operated by Cameco. The Key Lake Mill, which processes the ore from McArthur River, to the south. And then our Moore Lake project is adjacent to the east, and Denison's Wheeler River project, their flagship project, is adjacent to the west. So it's this big block of ground, over 73,000 hectares in absolute prime real estate, eastern Athabasca Basin. It's also an advanced stage exploration asset. It's had lots of historical drilling over a very large area. Previous operators included Rio and Hathor. They did quite a bit of work, and we are now going in to basically go in and test some of the targets that they had hit in. In fact, there was a few areas and a few zones of mineralization and even some multi-percent higher grade mineralization over skinny widths, but they were in these widely spaced drill fences, hundreds of meters apart in some cases. And so there really wasn't a lot of systematic drilling or follow-up work on these exploratory drill fences.
Do you question them when you do a deal like that on why they didn't follow up?
Yeah, I mean, look, okay, so, I get asked that quite a bit, and so the history of the project, without getting into the weeds too much on it, there was a fair bit of initial exploration, reconnaissance work, and drilling back in the 90s and early 2000s. Hathor, it was in Hathor's portfolio in the mid 2000s, and it was one of their core projects. And if you recall the Hathor story, they had the major discovery at Rough Rider, which ended up being acquired by Rio Tinto in 2012. That was the main project, the main deposit. But Russell Lake was also was another key asset, exploratory asset that they had at the time. And Hathor had done a lot of work, a lot of drilling, tens of thousands of meters of drilling, and again, they were finding some very interesting mineralization in a couple of zones of even skinny widths, but multi-percent mineralization. But again, it was exploratory drilling, so it really wasn't necessarily going in and vectoring in on a lens or a pod or a deposit of uranium. It was really just these widely spaced drill fences across these conductors, these EM conductors, which are your main targets. And so they were, the intent obviously is to find a deposit, but you really, these are small tonnage, high grade deposits, so you really have to hone in on them first. Rio then acquired it as a part of the acquisition of Hathor, and Rio from 2012 to 2016, 2017 did their own work and drilling at the project. But what's interesting, Rio's one of the largest mining companies in the world.
Yeah.
They are looking for the biggest of the big deposits, and this is a project that was still at an exploration stage, more advanced stage exploration, but nonetheless exploration. And they were looking for MacArthur's and Cigars, multi $100 million deposits. Not to say that can't be there at Russell, but it hadn't been.
They'll just pay a premium off you if you find it.
Well, yeah, I mean, look, we've got a lot of work ahead of us, but bottom line was, when we started evaluating the project, we were looking at it through a number of different lenses, and we saw, a very unique opportunity for Skyharbour specifically, given our existing flagship project, Moore Lake, is adjacent to the east. So there's a number of operational synergies, cost savings, because at Russell you have the road that services MacArthur River, runs up through the western claims that we now have, or that we're acquiring. There's power lines, and there's a 40-person state-of-the-art exploration camp that was installed at the project that we're inheriting as a part of the transaction, and that's a major asset that we now have. It's the northern part, northern Saskatchewan. There's it's fairly remote. There's a few communities up there, but it's not like drilling or exploring for mineral deposits in other parts of the world where it's a little more developed. So having that exploration camp is a major benefit for us, and will likely bring our drill costs down, not just at Russell, but at the adjacent Moore Lake project by 15 to 25%. We can actually drive from our office. We have a geological office in Saskatoon. We can drive from there to the camp in under 8 hours. We don't have to fly anything in and out. It's accessible year round. So that was a big one of the reasons that we were so interested in the project. But getting back to the geological prospects and the discovery potential at Russell Lake, we had looked at this project. We knew the geology, some of the similar same geology, similar rocks that we see at our flagship Moore Lake project extend on to Russell Lake, but also over to the west, you've got Denison's Wheeler River project, and there's a number of target zones and conductive corridors that extend from Wheeler onto Russell. In fact, the main target area that we're initially drill testing, and you probably saw the news yesterday, we announced a 10,000 meter inaugural drill program that's just commenced. We're fully funded for it, obviously fully permitted for it, so that's just started. So this is really when the fun begins and the discovery potential. Any next, drill hole can be a major development if we hit something big. We've seen recent discoveries like Fission 3.0 add well over $100 million to their market cap.
How far away are they?
They're over, the project that they made the discovery on is over on the west side of the basin, so it's on the other side. But it just shows you, investors are willing to pay up. There's a lot of interest and intrigue around these high-grade discoveries, and so with this 10,000 meter program, it's our largest single drill campaign that we've ever carried out as a company. And like I said, we're going to be focused initially at Russell Lake at what's called the Grayling Zone, and it was talking about these main targets being these conductive corridors. So what we have at the Grayling Zone and some of the initial targets that we're testing is, as I said, these widely spaced drill fences from historical operators, previous operators, some mineralization on both fences, but hundreds of meters of spacing between the fences.
Yeah.
So the logical thing to do is to go in and obviously drill in between that. And you can find a lot of uranium in a very small area. 100, 200 meters you can host a lot of uranium if it's a high-grade deposit. And so we're going back in. Those are the obvious first few targets that we'll be drill testing. But there's tens of kilometers of untested prospective corridors or conductive corridors elsewhere on the project, and we've hired a geological consulting group called Condor Consulting that's doing a full data, geophysical and geological data reinterpretation and compilation. So they're going to go in, they're going to basically stitch together all of the historical data on the project from the previous operators, the previous exploration. There's been tens of millions of dollars spent historically
to put a strategy together.
Yes, and more so at the regional targets that haven't been drill tested as much as the main targets that have had more drilling in them. So this is going to basically give us a new and refined priority list of the targets going forward. So there's really going to be no lack of drill targets on the project going forward. But getting back to this initial program, the 10,000 meters, and we're starting that off with a first phase, which will be 3,000 to 4,000 meters, and we'll take a break. We'll get the assays back, start another 3,000 to 4,000 meter program. The 10,000 meters will be it'll probably consist of 18 to 22 drill holes, depending on the drill hole depth. But that'll take us right into late spring, early summer, and lots of news flow, obviously, from that.
So how long do you think this first batch of drilling will go for? It's hypothetical, but
yeah, look, the first phase, this initial 3,000 to 4,000 meters, probably get that done in a month or so, and then, like I said, we want to get the data back. We want to get the geochem back. We'll know fairly quickly whether, we're into high-grade mineralization or not. But, we have high expectations for the program. We're confident that we can deliver a high-grade discovery this year on the project. This 10,000 meters is an initial program. We can look to ramp that up if we like what we're seeing, or if, the market conditions are there and investors and shareholders want to see more drilling. It's a project that has no lack of targets, and much like other discoveries, I think this is an important note, much like other discoveries that have been made recently, IsoEnergy being a great example at the Hurricane Zone, Little Rock project, that's a project that had historical drilling and work done on it, and they went back into a zone that had mineralization, that had all the right ingredients, and they were successful in delineating a very high-grade deposit there, and they're trading at a $350 to $400 million market cap. Russell Lake, in our view, has the potential to deliver that kind of a deposit, or even potentially larger. I mean, again, it's such a big property. I don't want to get too geological or get too into the weeds on the geology in case I lose people. But this initial target, this grayling zone. So this is a 10 plus kilometer long conductive corridor that basically extends from our project, Russell Lake, onto Denison's Wheeler River project, and then back onto our project. And the bottom part of that conductive corridor is what's called the grayling zone. And this is where a fair bit of the historical exploration and drilling was focused. There's some notable results historically, but again, they didn't go in and they didn't do tightly spaced drilling. It was fairly widely spaced. So we think there's value to unlock there through the drill bit. There's about an 800 meter discontinuous zone of uranium mineralization across this conductive corridor, across several kilometers. And so that 800 meter discontinuous zone of uranium, you get these structural offsets which can act as traps for uranium deposition. So you've got all the right geological features, ingredients, you've got all the right indicator minerals, and really now it's about just going in, tightening up the drill spacing, which is what we're going to be doing, and hopefully finding something big, finding something high grade. And one last note too, this target area is basically right off of the road and right by the camp. So you've got the infrastructure there. We can get to it again all year round. So it's a very exciting time for the company starting this drill program. A lot went into getting the project obviously acquired through this option agreement as we earn in. And a quick note on that, we structured it with Rio. It was, I think, a great deal. We structured it in a way that allows us to earn an initial 51%. We made a cash payment. We've issued them shares. Rio now is one of our largest or second largest corporate shareholder behind Denison. So we consider them a partner now. But we have to spend what works out to about $5.2 million when you net out our operator fee over a 3-year period. So we're working through that. We'll probably have that done. I'm hoping we can get that done even before year end. With this drill program, we'll put about $3 million towards that 5. And so we can lock in the initial 51%, and we're the operator. We have the majority stake in the project. We would then, if we elect to just carry on as a joint venture, we would have Rio as a JV partner. Nothing wrong with that. But we do have a pathway to get to 100%. So we can then move that 51% up to 70% through additional exploration expenditures and some cash and share payments. And then we have an option to buy out 100% of the project through a balloon payment that we can make after what would be the 5th year. And so there is a pathway for us to get to that 100%. But we're going to take it year by year. For now, we're obviously, this initial 10,000 meters and probably even more later in the year and early next year. That's going to be an important first step in our evaluation of the project and hopefully in delivering again a major new high grade discovery.
How do you structure that deal? Two things actually. How did you start negotiating with Rio? How did that whole process start? You reach out to them, or they reach out to you? Probably you.
Yeah, look, we had been in discussions with them for a little while on the project. Again, given its proximity it's adjacent to the main project, Moore Lake, that we had been drilling, that we had been focused on for the better part of the last 5.5, 6 years. We were obviously watching, Russell. We kind of had it in our crosshairs and wanted to, approach Rio and try to get a deal done. It certainly helped having, the market pick up. We saw, the valuations of these uranium companies pick up, Skyharbour included. We saw liquidity come into the market because that really allowed us to structure the deal that the way we did with them, whereby they're becoming large shareholders, right? If you're 3 or 4 years ago, it would have been, I think, very difficult to get the deal done that we got done, given the lack of liquidity in the market. It was obviously a much more difficult uranium market at the time, so that there was that was certainly beneficial. But another part to those discussions was the fact that we knew that area as well as we did, having worked there at Moore, having this strategic partnership with Denison. They're building a mine there at Wheeler River, the Phoenix deposit, and so we knew that area quite well. Our geological team, headed up by Dave and Christine, have worked in that part of the basin for many years, and so a part of getting the deal done was really showing Rio that we were the right fit, we were the right company to come in with the right technical expertise and knowledge to go in and make a discovery at the project.
The 5th-year balloon payment, if all was to go amazing, is that disclosed?
Yeah, it's all in the news releases, right? So it's a cash and share, potentially cash and share payment. That's it's over 30 million. So needless to say, the strategy there is, if we make a major discovery, that's and look, that's the great thing with the Athabasca Basin. It's the highest grade depository of uranium in the world. These high grade deposits, when you find them and you start delineating the resource and the deposit, you can prove up hundreds of millions of dollars in value in the deposit relatively quickly, right? So, that payment's made in the event we have a major discovery on our hands, and it makes sense to do it. But it's at our election. So if we don't go the full 100%, we wind up with either 51 or 70. And we lock Rio in as a joint venture partner, which again, like I said, that'd be great to have that scenario play out as well.
What's your cost of drilling right now?
Yeah, so look, there's been cost inflation rampant across the industry. We saw this a little bit at Moore Lake and some of our partner-funded projects, but we're expecting with the camp, with the infrastructure we have at Russell, we're expecting all in somewhere between 240 to call it 280. Sub 300, which is excellent, and a lot of it too depends on the size of the program. 10,000 meters, fairly sizable program, so that does bring some of your fixed, some of your costs down, and so it's a very reasonable price. I mean, look, there's projects in the basin that are more remote that you have to fly in, fly out of. That there's, and smaller drill programs, you'll see $500, $600, $700 all in a meter.
Right, that's very expensive.
Yes, and unfortunately there has been cost inflation. You hear about it obviously with mining companies and producers, but it works its way right down to the explorcos as well.
And the cost of capital gets a little more expensive too.
Yeah, I mean that cost of capital is a big part of that for us, is because we raise most of our money through equity financings. A big part of that obviously has to do with the market conditions, and our cost of capital has improved actually over the last several years, just because the share price has been moving up for the most part over the last several years, and obviously the uranium market's been improving, liquidity's improved, so we have been able to raise money at higher prices. We've also seen a transition from almost entirely retail shareholder base to we still have a great contingent of retail shareholders, and a good chunk of the outstanding is held in retail hands, but we've most of the capital we've raised in the last 3.5, 4 years has been institutional, and like I said, we've also had we've got Denison and Rio as large corporate shareholders. We're in all three of the North American uranium mining ETFs, so the URA, the URNM, and the Horizons ETF. So that's I mean that they don't participate in financings, but that's obviously helped in the open market as well. So yeah, we've got a great group of shareholders. There's a number of uranium centric funds that have done fantastically well in the last few years. So just in summary, these 7 option agreements that we've signed, 5 of which the partner companies are still actively earning in, meaning they're still funding all the work, they're making the cash and share payments on an annual basis. But these 7 agreements total now well over $70 million in partner-funded exploration expenditures and in cash and share payments, about just under 35 million in exploration, just under 15 million in cash, and well over 22 million in share issuances from these partner companies. So it's a fantastic way to make sure that value is being unlocked and that these projects are being advanced without us having to go and continuously raise money in the equity markets and dilute. It brings in other companies and other geological teams and expertise to go in and hopefully make new meaningful discoveries, big discoveries at these other projects. We try to keep a minority interest in the project and NSR, and if the company's publicly traded, an equity holding in the company. So Skyharbour shareholders, not only do they get exposure to the work and the drilling that we're doing at our primary projects of Russell and Moore, but you're also getting exposure to half a dozen other projects and partner-funded programs over the next several years. We're expecting, I said, 10,000 meters of drilling is planned, fully funded at our Russell Lake project. We'll probably do a little bit of drilling as well. We're planning to do a little bit of drilling at Moore Lake as well. We can move the drill around pretty easily. But the 10,000 meter initial program at Russell is going to be augmented with what we're expecting to be about another 20 to 30,000 meters of drilling with these various partner companies. So it's going to be a combined drill campaign across the various projects with us and our partner companies, ranging somewhere between 30 to 40,000 meters of drilling over, call it, the next 12 to 18 months. So a major combined drill campaign, which again provides for discovery potential, lots of news flow, lots of catalysts.
So just to the audience, I didn't stop to ask any questions with Jordan because he can read my mind somehow. I don't know what he's taking this morning. I have no idea, but he answers the next question and then he answers the next question. So I just let Jordan talk. Fantastic, Jordan.
Well, you got to stay focused on driving, so.
That's a good point. Yeah, if every interview can go this smooth.
Yeah.
So basically you're doing what you're doing with Rio Tinto with the Russell Lake project, you're doing that with.
Yes. Yeah, that's a great way of putting it. And yeah, look, it's I think we describe it as Skyharbour. We're building Skyharbour to be a one-stop shop for investors and shareholders interested in wanting to get exposure to high-grade discovery potential in the Athabasca Basin across several projects, across a diversified asset base, and having other companies pay for the lion's share of the exploration and the drilling that's being carried out. And so like I said, you're not just getting exposure to what we're doing at our core projects, you're also getting exposure through our ultimate, assuming these companies earn in, right? Through our minority interest in these other partner-funded projects, but also our shareholdings in these companies, and in some cases an NSR on the properties as well.
Okay. Do you feel comfortable we've overviewed the company?
I think we've done a good job talking about the company. And maybe one last note to make is just on the management team. It's obviously a huge component and ingredient for success with these companies. But we've as I said, we've been at this now for almost 10 years. And we've done a great job building, what I'd consider to be a top-tier management and technical team. Our management team, I run the company, but I'm surrounded by some very, very bright and experienced people on my board. I mentioned earlier Dave Cates, who's the president and CEO of Denison Mines, joined us as a director. 2016. He's a large shareholder of the company. He's been an amazing addition to the board, and again, like I said, a very close working relationship with the team at Denison. Joe Gallucci, who's the head of investment banking at Laurentian Bank in Montreal, joined us in 2019. So Joe really brings a lot of capital markets bench strength to the board and to the team. Jim Pettit, who's the chairman of the company. I've worked with Jim for most of my career. Jim ran a gold company called Bayfield Ventures. I worked with him. I was doing corporate development for the company. We sold that company to New Gold in 2013 and 2014. That's when we started Skyharbour. And then our geological team is based in Saskatoon, as I mentioned. Dave Biard, who's our head consulting geologist. He's been looking for uranium in the basin for almost 40 years. He was a senior geo at Cameco for a number of years, and then built and sold a company called JNR Resources, which was sold to Denison, and joined us. Christine McKechnie, who has worked with us now full time for most of the life of the company. She wrote her thesis, award-winning thesis, the University of Saskatchewan, on our Fraser Lakes Zone B deposit at the South Falcon project. She's worked with a handful of other uranium companies, and again really knows the rocks in the basin very, very well. So we've got a great mix of managerial expertise, capital markets expertise, matched with focused expertise, geological expertise in the Athabasca Basin.
What's the market cap of the company right now?
It's trading between a $60 to $70 million market cap. I mean, look, we were much like some of our peers. A year ago, there was a very strong market going into the new year, and in the uranium price, which I'm happy to chat a little bit about after, but the uranium price spiked in February, March, and April. We were trading north of 100 million, so everything's pulled back obviously since then, but looks like it's starting to creep up again. I'm expecting a year where we see higher uranium prices through the year and into 2024. So it's still a small cap company. There's an interesting dynamic right now in the Athabasca Basin with the landscape of companies, the universe companies that are there. There's really a fairly substantial valuation gap between some of the development stories, the Fissions, ISOs, Denisons, and obviously Denison and the next gens being larger companies, and then it drops off quite a bit, or at least it did. Fission 3.0 now is trading north of 100 million, but there was very few companies. UEX was really the only company that occupied that $100 to $300 million market cap range, and they were acquired by UEC, and UEC has come into the basin in a meaningful way through their acquisition of UEX and the Rough Rider deposit. So there's a couple companies that peer group companies that trade at a similar market cap to Skyharbour, but not many. And then there's a number of new entrants to the basin, and a few more companies in that call it sub $40 million market cap range.
How much of the company do you own?
I've been adding to my position. I'm well north of 2.3 million shares now, which I've accumulated through open market purchases and financings. There was no founder cheap shares. This was a vehicle when I came in to run it. It was really just a shell company, but it had been listed for a while.
Do you know what your average cost is?
I'd have to look that up. I'd say my average cost would probably be in the low to mid 30s would be my guess, maybe 30, around there.
So I can't speak for you, but my assumption as an investor would be that you're here and you're obviously growing. You want more substantial value out of this market cap to really look at your time in and say, okay, you know what? I created a lot of wealth for myself and shareholders, so you're in go mode.
Yeah, absolutely. And I've as I mentioned, I've been buying in the open market in the 40s. When we see pullbacks, I'm fairly consistently buying in the open market, obviously when we're doing financings as well. The value proposition, given the current market cap, is the strongest it's ever been in my view for the company, given all of the work, all the drilling we have going on, this inaugural program at Russell Lake, additional drilling at Moore Lake as well, and then you top that with, call it 4 or 5 programs, active programs with these various partner companies, and a lot more drilling and discovery potential from these partner-funded projects. So, yeah, I think there's incredible value there. I think that will be coupled with a very good year for uranium. I think the price of uranium is in for a very strong year this year, and I think we're in still very much the early innings of this bull market.